Today I'm going to be speaking on a very interesting topic, that is corporate fraud under the Companies Act 2013. So first let us start by understanding what exactly this Companies Act is all about. So if you see the information that is mentioned on the screen, it is the Companies Act. It's an act of the Parliament. Okay, so it's by the Indian Parliament, and it's a company. It's an act that helps regulate all the companies that are basically in the industrial sector of our economy. So what happens is this act came into force on 12th of September 2013, and the most interesting part is that section 135 of this same Companies Act, it introduces mandatory corporate social responsibility. So what is corporate social responsibility? So basically CSR is a short form, and what it says is that all the companies here under this act, or that are basically governed under this act, are or rather compulsorily have to indulge in spending a little of their profit, or rather giving a portion of the profit to the public again in the form of services or goods or anything that will help benefit the economy as a whole. Okay, so there's a lot of speculation around this particular CSR policy, because what happens is very common arguments are that the company or the people working in the company work so hard for that money, and then at the end you're giving away a portion to the economy. And there are a lot of speculations around it, but this is the first act in the world that makes it compulsory for companies to indulge in CSR activities. So what is corporate fraud under this act? So white collar crimes are the type of crimes that are committed by respectable persons. They are holding good positions either in public or private entities. So what happens over here is, if you study today, or rather a very common study that is done today is forensic accounting. So what it focuses on is forensic accountants are basically, the only job is to examine frauds and to help detect any possible situation that could arise where people may indulge in fraud. So what happens here is that these crimes are done by respectable persons. Now the reason behind this is because when you're a respectable person, when you're holding a good position in a company, you do not have people that will doubt you very easily. They will not say that this guy is or this person is someone who will indulge in fraud, because you're a respectable person and you're someone that's looked up to and that is trusted, most importantly. So it is usually done by respectable persons as a result. And you also have such, okay, so yeah, the definition of this corporate fraud is illegal acts characterized by deceit, concealment, or violation of trust. Okay, so let us take it step by step. So first we have illegal acts characterized by deceit. So what is deceit? Is basically cheating, lies. These things are deceit, because what is the intention behind a fraud at the end of the day is to cheat and to lie to somebody about something that, or rather something that you're trying to or yeah, or basically an activity that you're undertaking in order to have a personal gain for yourself or for the company that you're running. Now, it also includes concealment or violation of trust. So obviously what happens is, if you're a respectable person, if everybody is trusting you, you are naturally violating that trust in the bargain while committing a fraud. Then you also have which are not dependent upon the application or threat of physical force or violation. So see, in a fraud, what happens is you are entirely using your brains. You are not, you're not attacking somebody, you're not murdering somebody or any of that sort. It's just something that you're doing indirectly. Basically, by using your brains, you're creating a situation, or you're taking advantage of a situation where you can see that you can make a personal gain, and most importantly, you can get away with it. So that is what the entire procedure revolves around. Now you have individuals and organizations commit these acts to obtain money, property, or services to avoid the payment or loss of money or services. So naturally what happens is, see, the ultimate intention of a fraud is, see, what are the steps is that first you see an opportunity to commit a fraud. You then look for areas to get away with it. So you then see if you can get away with it. If you can get away with it, then naturally it becomes a much better, a much favorable condition for you to commit the fraud. And the last thing is you look for rationalization. So rationalization, basically you look for a reason to commit that fraud, or you look for basically a reason to give away as an excuse to commit that fraud. So what happens here is that individuals and organizations commit these frauds to these acts to obtain money, property, or services. So naturally, what is the intention at the end of the day is personal gain, right? So you're committing that fraud to gain something, to gain a to make some extra money, or to gain an extra position, or display something artificial that encourages or builds your reputation, or whatever it may be. Basically it's personal gain at the end of the day. Then you have it's also to avoid the payment of money or services. So how do you avoid it? Simply by tax, right? So tax payments take away a portion of your profit. So sometimes what a very common source of fraud is that people basically uh, you know change the entire statements in a way that helps them save out a lot on tax, right? So now you have or to secure personal or business advantage. So naturally, if you have if you the most common example is your listed companies. So over there what happens is, if your company is showing a very good financial statement, naturally you're going to have more people that are going to invest in your company. So as a result of that, you are basically gaining or rather you're securing a business advantage, because what happens is, if a lot of people are investing in a company, that's going to drive your share price up, and that is in turn going to increase the valuation of your business, right? Because what happens is, how do you value a listed company today is you look at your number of shares into market price. So if your market price is increasing, then naturally that is going to take up your entire enterprise value, and that is going to make you a richer individual, along with all the people who are owning the company with you, right? Along with the management, because you're then having a better potential to pay them a better salary or a better wage, whatever it may be. Yeah, so what is the next thing is, a corporate fraud occurs when a company or an entity deliberately changes and conceals sensitive information, which then apparently makes it look healthier. So, like I just explained, what happens is your entire statement, or anything, inventory or data, whatever data is modified or changed in a way that makes the company or the individual look brighter or better in order to gain something personal. So what happens is that the aspect of falsification or of financial information includes false accounting entries. So naturally, if you start right from journal, go up to ledger, cash flow, whatever it may be, you are basically falsifying the information. You're making entries, or you're taking away entries that would make the that would bring a sort of negative outlook on your financial statements. So you're basically hiding and concealing all of that information in order to make your statements look brighter and better. So false trades for inflation of profit. So what happens is, sometimes you have certain trades or something that a company indulges in, which helps in inflating the profits, which basically, in other words, is simply raising your profits, right? So you take your income minus expenditures, and that gives you a net profit. So what happens in these situations is that the company or the management may indulge in activities that maybe may help increase the income or may help decrease expenditure, and as a result of that, you have net profit that is increasing, which is making your company look like a very good potential investment for the public. Now you have disclosure of price sensitive information, of course. Then you also have insider trading. Now this is something that you all might have watched in Bad Boy Billionaires, or that Scam 92 serial that is very that is trending today. So over there what happens is that people or rather one individual will spread some rumors, or will create a sentiment around a particular company that drives people to invest in that company heavily. So see, the entire situation is controlled by one individual or by one rumor that is spread, right? So if tomorrow, if say I take for example, if I take, say, ACC Cement for example, and if I tell people that this company has invested in another company that shows very good prospects, so what happens is, it drives everybody to invest in that company. Of course it's a speculation, and you're basically investing in that company because you're expecting a future gain, right? So everybody's pumping the money there, and as a result of that, the share price is going up, right? So is it a confirmed information? No, it's just an assumption that that company has purchased another company that is going to help increase its profits and help improve its statements. So there isn't really Yeah, it's just price sensitive information, that's all. And you then have, yeah, you also have showing of false transactions, and which results in attracting more investors, of course. So now types of frauds, you have three types of frauds. The first is financial fraud, which basically, it includes manipulation, falsification, alteration of accounting records. So anything with regard to your finance, your financial statements or financial activities, anything that is creating or falsifying the data or the information that lies in that particular activity, is termed as a financial fraud. Now you have misappropriation of assets, which is one of the most common things that has, if you take all of the frauds that have been committed in the past, in the present scenario, whatever it may be, misappropriation of assets is one of the easiest things to do, because what happens is, you take your economic situations, or you take your different costing methods or whatever it may be, and you basically, you you set a false value to those assets, right? So you may charge depreciation in the wrong manner, or you may overprice some certain asset, or you may undervalue a liability. So all of these things, what is happening as a result of this is, it's creating a very good financial statement for you, right? It's improving your financial statements, and that in turn is helping give your company an unfair advantage. Now you have corruption. So corruption is the making or receiving of improper payments, offering bribes to public or private officials, and receiving bribes, kickbacks, other payments, or whatever. So, in short, to summarize all of that, it is just basically misuse of your authority. So if you know somebody who's in a very good authority or in a good position to help favor your situation, then you may offer bribes, or you may, make deals with that person in a manner that influences that person to favor your company or you as an individual, and give you an unfair advantage in the market. So that is the third type, that is corruption. Now, what is yeah? So now the Companies Act 2013 is the legislation which focuses on issues related to corporate frauds. So fraud in relation to affairs of a company or any corporate body as defined under Section 447. So of the Companies Act 2013. So what does this Section 447 basically mean? So it basically defines, all the guidelines around fraud, all the rules, the laws, how do you define a fraud? All of these things are mentioned in Section 447. Now, in order to amount to fraud, an act must be confined to acts committed by any party to contract with an intention to deceive another party. So, naturally, what is a fraud? Ultimately, at the end of the day, one party is cheating and deceiving another party in order for personal gains, right? So, that is basically what Section 447 in brief describes a fraud as to be. Now, what is the punishment for this fraud? So, I've basically summarized the information. So you have any person who is found guilty of fraud shall be punishable with imprisonment for a term which shall not be less than 6 months. Okay. Now, what happens is this may extend up to 10 years. So, of course, based on the, how intense that fraud is, it could go from 6 months to 10 years. Now, and it shall also be liable to fine, which shall not be less than the amount involved in the fraud. So, naturally, it will either be the amount in the fraud or more than that. Now, this fine can extend to up to three times the amount in the fraud. So, if you have, if you say commit a fraud of 1,000 rupees, you'll be paying a fine of up to 3,000 rupees, three times the amount. So, now where the fraud in question involves public interest, the term of imprisonment should not be less than 3 years. So, public interest means listed companies are the most common example of these. So, if your fraud in question involves a public interest, so a large chunk of the public is getting affected by this fraud, then your imprisonment will not be less than 3 years' time. Okay, so now I'm going to give you the example of a very it was a huge fraud that was committed back in the 19th centuries, during the phase of industrialization. So they call it the Colgate scam. Now, Colgate means it's not referring to Colgate as a company, but it's talking about coal, right? Coal as a commodity. So, what is this scam all about? So, what happened is in March 2012, there was a draft that was issued by the CAG. So that is basically a controller and auditor general of India. So they are the people who audit all the books of accounts of all major companies or anywhere where there's a large amount of money that is involved. So you have, they accuse the government of India of allocating coal blocks in an inefficient manner during the period of 2004 to 2009. Now, so see, what is this coal scam basically? Now, back in 1970s to 1990s, uh, this entire the procedures basically, you had coal blocks, right? So if any company wanted to indulge in coal mining or coal activities, there were these coal blocks that had to be auctioned out. So if I had a company and I wanted to start an operation or undertake activities with regard to coal, what I would do is I would basically bid for a coal block, right? So based on the auction price and based on the bidding price, current price, you know how bidding works, right? So based on that, the winning company would then get that particular coal block, which then they could use for coal mining and all of the activities with regard to that particular thing. Now over here, what happened is this resulted in a CBI investigation also, where coal blocks was in fact influenced by corruption. Now, the essence of the CAG's argument is that the government had the authority to allocate coal blocks by a process of competitive bidding. So, as I just explained, the government had to allocate these coal blocks that it had, by having competitive bidding, right? Because that makes it fair for all the companies to bid and have a fair opportunity in getting that particular coal block. So, this is something that the government chose not to do. So now, as we go further, right, you have both public sector and private sector enterprises ended up paying less for those coal blocks. So now, what happens when you pay less? Your profitability definitely increases as a result. Now, in response to this, the BJP filed a complaint, right? They filed an FIR, in fact, and with the CBI, which drove the CBI to investigate this particular criminal activity that they termed it to be. Now, these FIRs accuse them of overstating their net worth and failing to disclose prior coal allocations and hoarding rather than developing the coal allocations. So now I'll just read through it. Now you have, so from 1970 to 1990, that was when industrialization was just occurring in India, right? Now, Coal India was the only company at that time that was authorized to sell coal. Okay, so what happened is the government needed other sectors also to grow. So see, we had just come out of independence, and we were, of course, it was after a long time of independence, 50 years almost, whatever it may be. But what happened is that we were, as a country, we were working towards developing and building the entire nation, which had just come out of an entire loot, so to say, with the British rule and everything. So the major challenge that lied ahead of India was building an entire nation, industries, the economy, everything. So what happened here is the government needed all the other sectors to grow, not just coal. So what they did is they basically began allocating these coal blocks to different companies, okay, in different sectors, power related sectors. So as you know, in a developing country, you see at that time we did not really have hard facts to prove, or rather, we did not do an intense study on renewable energy. It was basically non-renewable energy, petroleum, coal, all of these things that were used to build the economy. So what happened is over here, the government needed other sectors to grow as well, and so they began allocating coal to different companies in different power-related sectors. So this basically helped in the growth and development of these sectors. And although it was inefficiently allocated to a few companies, leaving out other competitors. So see, what happens is, long story short, these uh, these coal blocks were given to certain sectors that were favored. Okay, so it was given to certain sectors in that certain companies in those sectors, in different sectors, power related sectors, and that give them the unfair advantage over competition, because those particular companies in those particular sectors had the advantage and had the ability to generate huge amount of cash flow and revenue and in turn profits, which helped them grow. But see, what happened is, no doubt the sectors did grow as a result of that, but it gave those particular companies in those sectors unfair advantage over other competitors in those sectors, because what happens is these companies use those coal blocks to generate revenue and cash flow, which helped them grow as an entire business, right? And that made them, or rather gave them tremendous growth and net profit margins and all of that, that helped them grow and give them huge amount of market share, or rather nearly 100% market share over other competitors in the sector. And see, what happened is, as a result of that, since these companies didn't have to spend any money on bidding, this also in turn increased their net profits, because that much worth of money that they would spend on bidding for the coal mines was saved out. So that money could be reinvested and retained in the business to help them further grow and have a faster growth rate as compared to the competitors in that sector. So yeah, so what happened is, this gave, they say that the amount of this fraud was nearly 1.86 lakh crores at that time. So you can imagine how much, to what tune this fraud was committed. And if you compare it to the very common frauds today, which is, Vijay Mala 9,000 crores and all, which is just like, it's a small fraction of the tune to which this fraud was committed. So yeah, if we consider, yeah, so what happened is, these yeah, so when you talk about 1.86 lakh crores, the government, see, when they were detected, or when they were discovered of fraud by all the, by the auditors and everybody, they could not, of course they couldn't, just close down all those companies, because an entire sector was depending on that one company in all of the sectors. So they couldn't just shut down those companies, right? Neither could they really fine those companies as much, because what happens is, it would take away a huge chunk of money out of the economy into the government's pocket, which would make no sense, because that would hinder the growth rate of the economy, right? So it became such a fix and such a situation where, there wasn't really much that could be done about this. It was just a fraud that was committed, and it's something that could not really be reversed as such. So as a result of that, you had so many companies growing, sorry, one company in each sector growing, and other competitors struggling to come up, in the economy. So yeah, that is basically what the Colgate scam was all about, and what, if you compare it to the Companies Act and what it states, so you can really imagine to what extent this fraud was committed, and under what set of rules and principles this was even called a fraud in the first place, right? So yeah, thanks for